Well, hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, a very good Monday for the market, given the fact that we saw a very good recovery on Friday and we've only built on that this Monday,
Absolutely.
right? So, a triple-digit recovery, in fact, 300-point recovery on Friday. And today as well, we've seen a triple-digit, almost 200-point move on the Nifty. The Nifty reclaiming that 22,300 mark. And mind you, this move comes ahead of the Reliance Industries earnings that is due later today, post-market hours. If you look at the gains, they were broad-based. If you look at the broader end of the markets, both the Nifty mid and small caps were in fine fettle. The Nifty small cap index, in fact, has gained in excess of 1%. Breadth was firmly in favor of gainers, almost 3:1. India VIX has also cooled off by 5%, so it has come down below that key 13 level as well, Yatin. All the sectors were in the green, but mind you, Nifty PSU Bank deserves mention. That index was up in excess of 2%. In fact, the Nifty Bank index is also inching closer to that 48,000 mark once again. So consumer durables as a pocket also did pretty well. Of course, we have Voltas to thank for that. Pharma did well, and all these sectors were in the green. Aside of that, if you look at the individual movers on the Nifty, BPCL, of course, crude prices have cooled off after that, the jitters, over Israel as well as Iran conflict. There's no news over that over the weekend. So easing tensions, bode well for oil prices, which have come down to $86 per barrel mark. And of course, OMC is reacting to that. So you had BPCL, top Nifty gainer, Eicher Motors, Tata Consumer reports numbers tomorrow. So ahead of that, the stock was up and about by 2.5%. L&T, Axis Bank, Bajaj Finance, some of these companies will be reporting numbers this week. So ahead of that, in fine fettle. On the losing front, NTPC, some of the steel counters that had run up quite a bit. So JSW Steel, Tata Steel, HDFC Bank, Yatin, steady numbers, but street didn't really react very positively to that. And aside of that, I think IndusInd Bank also among the top losers. Numbers will be coming out this week as well. But Yatin, we've had quite a few movers and shakers in the broader end of the markets, as is the case almost every other day.
Absolutely, and a lot of movers in the mid-cap space. But Nandita, let's talk about the Idea, FPO. So the Vodafone Idea FPO has received bumper subscriptions. In fact, last time I checked, the subscription was well above the 5 times mark. And the QIB portion, Nandita, which is the general barometer as to how institutional demand is, that got oversubscribed by nearly 15 times. And still, I think it's half an hour more for the entire process to shut. But strong subscription numbers for India's largest FPO. So that stock will remain in focus. What also moved in the secondary markets is Tejas Networks. That stock moved 17% higher. If you look at SW Solar, and they reported a turnaround quarter, as well as a good commentary from the management, led the stock moving nearly 10% in trade. If you look at PSU banks like Union Bank, that was up 7%. Yes Bank up 5% after Moneycontrol reported that Abu Dhabi's largest bank, Emirates NDB, is also interested in picking up SBI stake in Yes Bank. Exide continues the momentum, stock up 5%. Indigo up 5%. Patanjali, Bank of Maharashtra, all of these stocks gaining by nearly 5% each. But accident of the day, Nandita, was GSPL. That stock on the back of tariff cut, that stock was down 20%. Obviously, we have more details coming on that. But Thermax, Brigade, Spark, these are the other stocks which were down nearly 5%.
Yeah, I guess Spark has been, on the losing end for quite some time. I think last 5 sessions that stock has shaved off nearly 20%. But let's talk about Reliance Industries before we talk about all the other stocks that are on our radar. Of course, numbers are expected post-market hours. Recovery in oil to chemicals as well as, refining is expected to lead Q4. Of course, we've always, we have been seeing good traction in the retail as well as telecom business. That is expected to continue. Consolidated revenue is expected to grow in excess of 11% on a YOY basis. Even EBITDA is expected to jump somewhere close to 10%, 9.5% or thereabouts on a YOY basis. In fact, analysts believe that the company can achieve 14 to 15% EPS CAGR over the next 3 to 5 years. If you look at the margin picture, outlook in refining and petchem, these two will be the key monitorables. Also, the company is expected to give some color on the investments that it announced with respect to new energy business, right? So that's another monitorable. Guidance on capex, debt profile, these are some things that will be watched out for. With respect to Jio, the subscriber additions have, picked up momentum, improved on a quarter-on-quarter basis, but average revenues per user for Jio is likely to remain flat on a quarter-on-quarter basis. Store expansions, higher footfalls, may aid retail arms performance as well, Yatin.
Absolutely, and Reliance Industries, I think, Nandita, the most important thing with now Vodafone's fundraise, I think a lot of investors will ask, the management, or we would like to know that how really Jio looks at the tariff hike moving ahead. How does the telecom business move ahead in terms of value unlocking along with the retail business? Because I think markets now are really expecting, that the value unlocking at the group level with an IPO or a demerger of the retail or the Jio telecom business should be the next big trigger for the stock ahead.
But of course, the stock has done fairly well, Yatin. Over the last 6
Yeah.
months, it has had a very good run. I think up 30% or
Correct.
thereabouts, if I'm not mistaken. But with that, let's take a look at some of the other stocks that are on our radar this afternoon, starting with the accident that Yatin mentioned, GSPL. Of course, it was locked in lower circuit today, tumbled 20%. The petroleum and nat gas regulatory body, PNGRB, has cut tariffs by 47%. It nearly halved it to 18.1 rupees per MMBTU, vis-a-vis 34 rupees per MMBTU. Remember, the company was going to ask for 51 to 54. So 18.1 in comparison to that is over 60% less than what the company was going to demand. Of course, the new tariff of 18.1 MMBTU will be coming into effect from the 1st of May. Analysts were working with 10 to 15 or 20% cut, but of course this magnitude 47% has taken the street by surprise. It's of course a negative surprise, and stock clearly reacting to that. The new tariff will also have significant downside implications to earnings. But why did PNGRB really cut the rates? PNGRB has has the expectation of less capital investment in the future. On the basis of that, or less capital investment, there will be less operational expenses on existing and new pipelines, and a higher utilization level predicts a much higher volume. With respect to that, or keeping that in mind, the tariffs has been revised lower. Also, the fact that it has been a much delayed tariff revision. It has come after 2 years, Yatin. So whatever the company had submitted in terms of capital investment, I think on the basis of that, this decision has been taken. In fact, PNGRB had spoken to CNBC TV 18 earlier in the morning, and they have said that they are not open to any negotiations or renegotiations with the company with respect to volumes. If you look at what brokerages have to say, well, Kotak has downgraded the stock to reduce from buy. Target price has been cut to 360 rupees a piece. They expect the company to challenge this tariff order, and they've also reduced the FY25 to FY26 earnings estimates by 28 to 37%. And they've also said that they expect the return on capital employed to decline sharply to 11 to 12%, vis-a-vis around 24% on average over FY19 to FY23. Nomura has also downgraded the stock, and they've cut the EPS as well as EBITDA estimates quite sharply. But with today's move, I think the stock has turned negative for the year, and 1 year return has also come down to 18% or thereabouts, Yatin.
And a big gap down for GSPL on the back of that tariff revision. But from the top loser in the future and option space to the top gainer in the future and option space today, that was Voltas. Now this Tata Group company obviously has lost some market share in the air conditioning segment, but now according to UBS, they believe that the target from here on could be much higher than what the street is expecting. In fact, UBS today upgraded Voltas to a buy. Target from 885 has been raised to a whopping 1800 rupees per share. Now, UBS assumes that the market share for Voltas will reach a level of 23% from the current 19.5%, which would mean that from here on the volume growth also could pick up substantially for Voltas. Obviously, the shares of Voltas are now trading at a multi-year high, but now UBS believes that the Voltbek JV should also boost profitability, as its break-even point now is expected to be somewhere in FY26. Most importantly, the incremental revenue of 10,000 crores, 60% of FY27 should be in the consumer electronic space. So Voltas as a brand in the domestic market is expected to do well. In fact, now UBS believes a EBITDA compounded annual growth rate of nearly 28% and sales growth of nearly 20% for the next 3 to 4 financial years. So on the back of rising market share and rising sales volume, especially in the air conditioning segment, UBS has now turned bullish on Voltas, and the stock today gained by nearly 7.5–8% intraday, which is one of the top gains in the last 2 or 3 months. So good move by Voltas on the back of this UBS upgrade. On your screens right now, the shares of Voltas ending higher by nearly 6.5%.
Right. I think, in fact, over the last 1 month or so, the stock has gained somewhere around 30%. Yatin. Also, FIIs have increased stake, I think, in the company over the last quarter, in the March quarter, if I'm not mistaken. And remember, we were talking about the 2 million in sales milestone that the company has hit.
And most importantly, Nandita, I think ever since we had the IMD prediction of a heat wave, all of these air conditioning stocks, especially Voltas, have seen that kind of a run up. Obviously, with the UBS report today, another flare coming in the share price.
Well, of course, good news for all these companies, that sell all these cooling equipments and appliances. But, talk about the IT pack as well, gloomy times, so to say, because we've seen Persistent Systems, of course, reacting to its earnings. Although revenue and profits were above estimates, it's the margin miss that has disappointed the street, Yatin. In fact, if you look at the management, the commentary rather, they have said that they aim to sustain top quartile growth amid challenging macro environment, but they have also said that they'll be maintaining margins at the current level. So, of course, the guidance that they have given on the margin front looks very flat, and that has come as a big disappointment. For FY24, Persistent had reported a 50 basis point contraction in EBIT margin to 14.4%. Of course, that is less than what Nuvama and Kotak were working with. They both were working with an estimate of 14.5% and 14.6% respectively. Of course, if you look at this particular company, Persistent Systems, Yatin, over the last 5 years, in the Modi government's Modi 2.0's era, it has outperformed, and how it has risen over 1,000%, so to say. But of course, now today it reported the stock saw its worst decline in 6 years. In fact, stock is down over 13%. Ever since Accenture also cut down its guidance, we've seen some of these IT names. In fact, most of the IT names come under pressure. Not surprising that the stock is down over 13% in the last 1 month. And if you look at the performance from some of these IT giants, barring TCS, Infosys, and even Wipro to an extent, has disappointed the street, so to say, Yatin. But so we'll have to see how, the demand for discretionary demand picks up in the US. A lot is dependent on that for the IT recovery to really play out, Yatin.
Absolutely, and I think the stock actually didn't open with a big gap down. But I think over the day, I think market realized that still in the IT space, we have a lot of good news to come, or probably the green shoots are not as expected by the markets for the fourth quarter.
Well, then, those were all the stocks on our radar this afternoon. Of course, we are waiting for the big number, the index heavyweight Reliance Industries, to report its numbers post market hours. Of course, we'll be taking stock of those numbers on our morning show tomorrow on opening bell. So, of course, tune in for that. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. You guys have a great evening, and come back and join us tomorrow morning.